Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, April 8th, 2009. Well, the markets are advancing today, folks. They are advancing on very, very light volume as we head into the end of this shortened week. And again, Friday, the markets are closed here in the United States for the Good Friday holiday, along with Passover holiday coming as well. So what you're seeing, folks, is light volume, the market trending up. You got a little bit of positive news this morning across the board. We had Centex getting bought out. That's a home builder getting bought out for a premium. That was a bullish sign for the home builders as a whole sector. We also saw some decent earnings from Bed Bath Beyond. We saw some news from the Securities Exchange Commission on short-selling rules that they're going to be putting in place. So really across the board, there's been a nice little bit of positive news out there that's able to give the markets a lift today. Now, it was very interesting because we saw a hard sell yesterday into the close led by bank stocks, and it was actually a beautiful sell the news, or sell the anticipation, if you will, and I want to just explore that briefly. What we had seen in the prior week or two was the last hour of the day had really been, for almost 2 straight weeks, a squeeze up on the financials. You saw JP Morgan, Goldman Sachs rally up into the close. And yesterday, for the first time, it didn't do that. And those stocks stayed straight or sideways while the market ticked up yesterday into the last hour of trading. And those, again, the Goldman Sachs's, and I'll show you the chart. Let's flip to that chart on Goldman Sachs. Yesterday, while the market, the spiders were rallying, Goldman traded sideways. When you got to the end of the day and they hadn't rallied, everyone who anticipated the rally and had bought on anticipation of that last hour push started to dump, and you saw a nice little sell-off on that non-event. Now, what you saw today on the Goldman Sachs was a continuation of it, and then also note the bearish flag pattern on Goldman here. Beautiful bear flag pattern coming to fruition here, starting to tick down a little off this flag pattern. Remember, in spirit of bear flag here with a big, big move down, you can see all the way from a level up here, and then again all the way down, came all the way here, and then you get a sideways to slightly up. That's an in spirit of bearish flag pattern with a tendency to break lower, and you are seeing that begin to advance to the downside. Now, the only thing that's going to stop it and hold it here is the 20 moving average to the downside on your Goldman chart. But let's go back to the spiders. I want to talk about what's going on here, because what we did see is initially we had a nice little gap up this morning on the positive news. You had a gap up, and then right around 10 o'clock, right into that first hour, that key time frame that we focus on, folks, you started to see selling come into the market, and it was a beautiful sell pattern. Notice how we basically every key level that was on this chart, and these are the same levels that were on yesterday's chart that I've shown you, and that are on the nightly videos that I handle for my traders and my premium subscribers that handle, you know, the nightly videos in the research center. These are the exact same levels, and it's important to realize these levels are intricately placed. You have to understand price pattern and time. You need to understand pivot points and trendline analysis. If you can do that, these levels will tell you every key place to look for a buy and a sell, and the traders in our room exactly use these levels to trade and scalp off the market. They'll scalp long, they'll scalp short based on these levels. And what you saw this morning was a gap up, and you were able to close your first candle on resistance. The second candle was able to push above, and look at where the top went. Went beautifully to this secondary resistance point before pulling back, and look at what a short that was. If you had shorted right at the pierce of the 200 moving average and this trend line, look at that sell-off you would have gotten all the way back down. And notice each level. You closed here at a key level, then you sold off. Where did you close the next candle? Right here at a level. Where was the low of these candles before they bounced? Right at the lows of the day. So each level is put at a pivot low or a pivot high, placed perfectly on the chart, and it will tell you from day to day if you can pinpoint these levels, and these levels extend for weeks. Literally, these key levels on these trend lines extend for weeks, so important. But nonetheless, you can see how beautiful that was. Right here, perfect long opportunity. We had called this out in the chat room. Beautiful opportunity to go long in this market for a beautiful rally up. And honestly, I probably would have taken some off at the 20 moving average here, and then again, right at this trend line upwards of here. It ended up going much, much higher. In fact, it rallied all the way back. Notice where we went to, the same trend line that this one stopped on. You came up, tagged that exact point before you pulled back, but notice the pattern developing now. Alright, remember, when you get a major sell-off, you look for a bearish flag pattern. Once you get a steep spike up, you start to look for a bullish pattern. And in this area here, a way too steep pattern to the upside, and what you start to look once you hit this high is a bullish consolidation pattern. Sure enough, that's exactly what you get here. Notice the 1, 2, 3 bars all inside this green bar. These are inside bars or something you got to learn. Know your inside bars, know how to recognize them, know when they are negated. This is all stuff, again, we'll teach in our research center to you, plus give you premium guidance about where this market's going today, tomorrow, and next week and next month. And notice again, where does it pull back to? The trend line. And look at how accurate this trend line. You see this pivot gap up, a gap down right here? This extends even further back to a key line as well, but it's key right here, and it comes back into play on this pivot. So beautifully done here, where it moves back up, you get the in spirit of bull flag, rallies up. Where does it go? Our next resistance point, which also coincides with this pivot point low, as well as these consolidation levels. And again, I can go back and show you how far these lines go back. It's really amazing, but look, it came into play right here. It came into play right here where the market hit resistance and support right here. So these lines, my point being is you need to understand this stuff. You have to map it out because it does come into very, very important play over the next couple weeks. These same lines, if we're trading in the same range, these same lines that are on my chart now will be in play. Absolutely. So just watch that. But in any case, notice how you hit this higher resistance point, guys, and now you start to pull back. A little bit of a semi-topping tail, not a true topping tail here, but a bearish candle nonetheless. You're starting to see a pullback. You're back underneath the 200 moving average. I'm going to be watching this 200, and I'll explain why. And I'm just mapping things out in my brain here and looking for other trend lines to point out to you. But one thing I am seeing, take the low here and extend it right up. It looks to me like you have a little bit of a trend line that you're coming into play now. Notice how you take this low and it comes in contact with this right before the bounce and then the pullback, then you finally broke lower. And then on the way up, you're hitting here, crossing it, and then pulling back, and then rallying up to here again. So this is telling me that this line is an interesting line, and every time it gets hit, you're getting a pullback, and that should be something we watch for the rest of the day in case we do spike up and hit it again. Alright, folks, so keep a close eye on that one. In addition, what I do see here is another trend line. This one's a very steep one, and it looks like it's coming into play right now. See here, if you take the lows connected to the low here, the low right here, looks like you're coming right into play. This is a very steep trend line and most likely will be broken at some point, in which case you'll probably see a sell-off to the 20 moving average. Now, having said that, folks, I think it's important to realize something. This is very light volume. This is basically the day before the last trading day of the week because Friday's a holiday. Whenever you have light volume like this in the market, and look at these last couple candles, almost no volume on the pullback especially, which could also be an indicator they're going to float this market up for the rest of the day. But in any case, you have to anticipate upside. Whenever there's light volume, for the most part, it's upside volume. So watch that for the rest of today. Again, if we break this trend line right here that I just drew in, you probably go test the 20 moving average. Again, watch your key levels. Note how this trend line is coinciding with this sideways trend line, this flat one, and that's what I call a necktie of two crossing trend lines. That's very, very good support. You're starting to get that bounce off the support. Now, if you trend higher and don't break the high of the day, then look for this trend line to get broken later today and a little bit of a sell-off, maybe in the 3 o'clock hour. We'll have to watch, all right? But in any case, that's something I definitely think is important to watch. Know your trend lines, folks, without a doubt. I'm just scanning through as well to see if there's any other lines I find as important. Now, the other thing you want to look for here is you have a little bit of a W pattern developing here, if I may. You have a little bit. Let me change my color on my drawing here so we can draw this in a little better. And this is also something you just want to watch. I'm not sure if I'm fully trusting of this, but this could be a little bit of an A pattern developing before a move up. And ultimately, guys, you're going to want to watch for gap fill. Gap fill, again, will handle this level up here will be your ultimate gap fill on your chart from the other day. That will be a very interesting gap fill to watch for if we ever do get up to that level. See how we closed here last Monday, and then on Tuesday we gapped lower, and then today's Wednesday. So, again, here's your big gap all the way down to here. Right now, you're you're closing some of that gap by hitting key levels in that day, but the ultimate gap fill would be upwards of that point. Again, just keep in watch now. You want to watch what type of pattern. Again, you're starting to spike up a little bit here. We want to see how far we go up, whether or not you get a good bounce off this key level, because this is definitely where these two crosses a very key level. Then do we break it a little later? I do anticipate this trend line will get broken later, but again, you'll have support at the 82.50 level, then on the way down the 20 moving average. After the 20, 82.25, then the 50 moving average will come into play, then 81.90. All right, we'll talk to you soon. Take care, folks.